Shares of Alibaba sinking this morning after it saw a profit plunge 86% from a year ago. But the Chinese e-commerce giant did see a revenue come in and beat expectations for the fourth quarter here. Taking a look at the shares, they're down by about 5.2%. Seana, I don't print off too many earnings reports, but I printed off this one here today for Alibaba. One of the huge things, of course, was the profit drop. It was just so striking that I thought it was worth the printed paper and the ink. But at the end of the day, one of the things that they also mentioned was areas of acceleration of growth in customers in cloud computing revenues specifically. That's the more profit-friendly part of their business. However, you still got to look across one of the major items within China as this moderating consumer continues to impact the e-commerce and marketplace revenue there.
Could have just printed the 86% number, save some paper.
I could have done that. Yeah.
You know, killing a lot of trees with that.
Well,
but it's worth it. You made your point. So it was worth the prop to make the point. But let's get back to the larger story here, because this is also, when you take a look at Alibaba, you take a look at these results like you're talking about here, that 86% drop in profit, it is or net income, it's worth taking a look at as we're zeroing in on, because Alibaba is a barometer for so many of these other larger Chinese companies here, and also just gives us a sense of the recovery or lack thereof that is playing out, the pressure that Chinese consumers remain under as the economy does continue to struggle. And then Alibaba specifically, there has been some concerns and has been voiced by a number of analysts, even some inside the company, about losing some of their market share here to some of their rivals out there, namely Pinduoduo, PDD, when it comes to some of that lost business. So there are certainly a number of concerns that continue to surround Alibaba, but when you take a look at the extended action here on shares off just about 5%, I think you could chalk that up to some of those persistent worries that the company has had around the weakening consumer here in China, the 86% drop that you noted there in net income, and then also just how long it's going to take for this recovery to play out and to really start to pick up more steam. Yeah,
and I think that's where they're going to lean into one of the more profitable elements of their business here, especially as we had all expected for Alibaba to be in kind of the 6 different group breakup and 6 different segment breakup by this point in time. You kind of move past all of that, and now focus is really on, all right, where they're going to be able to drum up even more demand for some of their portfolio clients within that cloud intelligence group, which actually saw for the quarter ended March 31st, that ultimately grew by about 3% year over year. And so really investing further in that, further in compute, database, and AI products there. Larger question of what those AI products will look like. You don't really annex Alibaba to the same AI conversation that you would a Microsoft, an Alphabet, or Google, or even, well, I'm not going to put Apple in there, but a Meta Platforms at this juncture.
Yeah. And I think that's a big question, too, just in terms of what that growth looks like and what their plans in terms of future capital allocation, what that exactly looks like, their investments here for AI.